Stock of the day, I had to pick it, I'm sorry, but it was Pro Medicus. It has been downgraded to a sell from hold by Bell Potter. It says that there was hardly a gap between Pro Medicus's first half revenues and market expectations, but the broker is highlighting that a deeper dive into the details has revealed, in its view, softer than expected growth in exam revenues being offset by once-off hardware sales. It points to underlying revenue growth coming in at 24% only, it says, signaling serious slowing of the pace in comparison with the years prior. It says that not helping is the observation that operating expenses grew faster than revenues, something not witnessed in a long time. Now, we'll be speaking with Pro Medicus CEO Sam Hubbard off the back of those results. That's at about 3:20 p.m. Eastern, right here on ausbiz. So, Luke, Claude, a company that you and I have had a chance to speak of many times in the past. Claude, what do you make of Bell Potter's assessment? Pretty negative, downgrading the company, although I will note maintaining its price target at $75 per share.
Well, that's right. It's fair to say Pro Medicus stock has now entered the realm of, it's trading relative to the expectations and what people said before, et cetera, et cetera. So, look, people think that, it's a negative report, but I say, look, even if they do think that this stock is worth $75, that's a pretty high valuation and a pretty high PE ratio. And I think it's not so much a matter of Pro Medicus has really done anything wrong. It's just that the share price was too high previously. Like I've come on here, we've talked about it recently, and I've of course said, yes, I'm a long-term shareholder in this company. That means I don't always sell it just because the share price gets overvalued. Why? Well, I've done that a lot of times, and mostly it has turned out to be, in fact, I think it's always turned out to be the wrong decision. And sometimes, I would be retired if I hadn't made that wrong decision. So yes, sometimes the stock is going to get overvalued, and it just becomes this momentum play. So, what we've seen previously, and I think Bell Potter is kind of reacting to this. So I don't really disagree with them that much. Like it sounds negative when they say sell, but that's the difference between me and them. They say, the price is $94 and we think it's worth $75. So sell it. And it's like, okay, but I don't trade that way. And also I don't believe I'm that good at being able to pick the market that I should trade around a 10, 15% kind of difference of value versus a price target. So it's just a totally different plan. Brokers love to get people to trade. Buy it now, sell it now, hold it now, buy now, sell. That's how they make money off their customer. I'm more in the business of trying to identify a long-term business that is going to compound excessively over many years. And Pro Medicus, these results were still record results. If you go back to the FY 2023 results, I wrote an article saying, Pro Medicus share price soars on record results. And I said in that article, it's 75. It was actually $75 back then. And I was like, I'm holding on, but I'm not buying at $75 then either. And then it just so happened the share price ran all the way up to $110, probably mostly out of the fact that we've been having this incredible AI hype that has been driving many stocks around the world, not just in Australia. And so I think there was probably like a lot of hot money that jumped in on the stock because it actually does have some oblique AI angle there. Of course, I do think that the AI angle is an absolute potential thing. But again, Bell Potter's not that unreasonable when they say we remain highly skeptical regarding the short-term earnings potential from AI applications across the radiology sector and PME alike. Absolutely fair. Like nobody in their right mind would expect we're going to get 10 million of AI revenue from Pro Medicus anytime soon. I think that we're already deep in the future when we're talking about that kind of thing. And that matters with Pro Medicus because, of course, to justify their valuation, this needs to be a company that does have a deep, long, amazing future. And until proven otherwise, I think that could still occur. So notwithstanding the fact that you may very well argue that the share price has run ahead of itself, I will continue to personally hold shares in this company. And I'm much more interested in, does it ever get oversold down to a cheap price? Because the last time I bought, I looked up at it and it was about $28 something. And it felt so expensive then when I was buying it back then. So, and obviously my buy price is much higher than that now that I would buy it at. But we're not there yet. So for me, it's still a hold.
Got it. Thank you. Luke, PME, you've had to put your mind to it. Of course, when the share price falls, everybody says, what's wrong with that result? That must have been a bad result.
I was going to say, if there's any fears that Claude wasn't going to be eloquent today, that's been put to rest, because I sat here nodding my head to that whole speech. Look, it's pure time frame divergence, Nadine. Bell Potter and every other broker gives a price target over a 12-month time frame. And I don't think any of us could have sat here over the last maybe 2 or 3 years and came to a really good case that on a 12-month valuation, Pro Medicus looked reasonable. I think the last time we spoke about it, I made that point that you were having to bake in, I estimate, somewhere like 5 to 10 years of steady growth to get to today's valuation. But of course, I think you're very fair and in Claude's position, owning the company, to back management to do that. They've got the track record of doing it. They've got the contract backlogs in place. I think it's all very reasonable from that point of view. I agree with his point that I think Pro Medicus, particularly over the last couple of months, became almost a proxy for the US tech trade. So, when the NASDAQ's doing well and Aussie investors look towards, well, where's our tech scene and those companies to follow them. Realistically, Altium, WiseTech, Pro Medicus are the large cap tech that you turn to. So, I think you look at the business and the result, I found nothing that I could really critique the business about. If anything, Bell Potter's scratched at the one thing, which was that incremental margins were largely flat. So, but again, we're talking about net margins of 36%. I'm not gonna wrap the knuckles of Sam and the team for maintaining a margin that high. So I've said hold on this business for quite a while in agreement with Claude. Unfortunately, I haven't been there for the journey with him. But look, this potentially provides an opportunity for people like Claude who have a longer term time frame on a pullback like this. As for an exact price, again, you have to sort of crunch your own numbers and get some comfort over that longer term. But let's say hold for the program.
Got it. Thank you. Now, we're speaking with Sam Humpert later today. Just very quickly, one question. Oh, sorry. Go ahead.
Did we have that chart about the PME overseas revenue? I'd just love to just say that because it's a key metric that I follow.
We've got that. We can bring that up.
Anyway, so essentially what this chart is going to show is that the half-on-half revenue growth slowed down in the most recent half, but it does that. It bounces around over time. So for that reason, I just contextualized, there we have it. So that the line is the growth rate itself, the half-on-half growth rate. And you can see that went down. And that just happens sometimes. So we would be hoping to see that go up in the next half. And then, the final point I'd make is regarding the margins. The second half of last year had exceptional margins. So I was kind of expecting them to come down. But in hindsight, some other people were expecting them to stay at those record levels half on half, even though the first half always has lower margins due to the high RSNA conference cost. Not always, but almost always.
All right.